Give us a little, I guess, options 101 from Marty, basic, rudimentary, how do options work in crypto? And then we could kind of dive into more deeper topics.
Sure. Um, it's a little different in the crypto space versus the traditional finance space. Options rule the markets in the traditional finance space. There's way more notional volume in options traded than individual shares. That's because one contract in TradFi is 100 shares. So it gives you the right to buy or sell 100 shares at a specific price at a specific date. One of the reasons I think that crypto options hasn't really taken off is because one contract is one share. So it's a lot easier for people to go on and click 100x up or down, green or red, instead of, oh, if I buy this, I don't know, like on Robinhood or something, right? Or, I'm going to
Sure.
buy this one call and this is going to do a 10,000x if the price moves, whatever, 100%. So that's one of the reasons that I don't think that it's really taken off. The major players are TradFi guys that have come into the crypto vol space, and they're starting to move size, but it's nowhere near perp volume, right? It's nowhere near spot volume, and there's some simple option strategies that you can run in TradFi that I don't think really work out in crypto. We can talk about that a little bit later, but for me, one thing, just one like a one-liner for options is options are the best way to get into any sort of position you could ever think imaginable. You can make money in any sort of market conditions, up, down, sideways for months. It's just you have to know what you're doing and not just click buttons.
Takes a little more math, huh?
Yeah, well, the computer does the math, thank God, right? We're not doing it by hand. But a simple strategy that's been paying off for a lot of new users is holding spot, so they never have to sell their spot, and then they sell covered calls. So I don't know, you hold one Bitcoin and you sell one contract at $40,000. You collect, I don't know, $50 or something. Um, but if the price goes over 40 grand, you have to sell your one coin at 40 grand. Well, as long as the price isn't over 40 grand, you collect that $50. And if you can do that every day, every week, every month, every quarter, every year, that adds up. And if you have 10 coins, 5 coins, 100 coins, 1,000 coins, that starts to really increase your coinage. Coinage isn't a word, but increases your holdings.
Awesome. Makes sense. So then, I guess let's get a little bit deeper now. What is your go-to option strategy in the markets? I know you said you're kind of delta neutral, making money regardless of direction. What's your, go-to bread and butter, option strategy?
Sure, yeah. We run a bot, so it's in and out of positions in seconds and minutes and hours. If I was just manually clicking, since Friday, I guess, I've been selling, um, what is it, on ETH, I've been selling 1,900 calls and 17 or 1,800 puts. And that's just, I don't know, it's super small. I don't know, you're making probably $4 a contract. Okay, but you put 1,000 ETH. Okay, that's, $4,000 a day. That's been my go-to manually for since Friday.
Okay. Nice.
I wouldn't recommend that though. Okay, don't do that, right? Don't just copy that advice slightly, right? It's a joke, right? I always say, oh, it's easy pimps or it's that easy. It's not easy, right? We're fully hedged, we're fully delta hedged. So with perps, how we use perps is we fully keep our deltas neutral, which means if the price goes crazy, right, we're selling this contract at I don't know, let's say 1,900 on ETH, and if the price goes over 1,900, it's an infinite loss essentially. You can, if it goes to 10,000 tomorrow, you're going to get liquidated way before that, right?
Of
So you
course.
have to hedge out the position, and the easiest way to do that is with perps, perpetual contracts. And our bot is every 5 to 10 seconds. So every 5 to 10 seconds, it rebalances our whole portfolio, even if it's on my uh, manual PA account or if it's on the bot account. So if the price goes to 10,000, yeah, it'd probably be, underwater, but the hedge would cover majority of the loss, not minus, 10,000% in an hour or whatever it is.
Okay, that makes a bunch of sense. So let me kind of pick your brain out a little bit deeper on volatility, right? So, as traders, volatility to us is basically, price moving up or down a significant amount, which gives us opportunity as directional traders to trade one way or the other. Now, I know from an options perspective, you look at that quite differently. So can you kind of touch upon your understanding of volatility for us and how you kind of use that to inform your decision making in your options trading?
Sure. Yeah. Options for us are priced in IV, which is implied volatility. So we don't sell an option like, oh, it's $50. We'll sell an option like it's we call it 50 vol, right? Like 50%, right? So or 40 or whatever it is, 60. If at the FTX spike, I think ETH hit 120 vol, and that's like insane. Traditional markets never get to that level. So for
Unless
us,
it's a
options are
regional bank.
unless you are a regional bank.
Well, it was
Yeah.
First Republic's like Ivy at one point was crazy high. I remember looking at that.
Right, like the easiest one that I remember is like 2008 SPY was like 80%, so it was an 80 vol product. Like that's insane for traditional markets, right? It usually trades under 20 vol, which is simply saying like that the market isn't implying a huge move in the next 30 days. Where in crypto, we trade high volatility products. We like these huge, $1,000 Bitcoin days, $100 ETH days, and that's like totally normal to us. Where if you tell traditional finance people, "Oh my God, I'm trading a 120 vol product," they're like, "Dude, you're gambling, right? You need to get out of this space right now. You need to get an IRA, and you need to buy a SPY, and you need to make 10%, and you're going to be happy."
You will own little vol and be happy. I like that. So let's get a little deeper now. How do you use vol to actually inform the decision making in your process? So obviously, when you see high vol, how are you trading that versus when you see low vol? What's the go to strategy one way versus the other?
Sure. If you're buying options, you're long vol essentially, and if you're selling options, you're short vol. And if you are selling options, people say you're picking up pennies in front of a steamroller, and they'll always pound this idea on your mind. Oh my God, you're picking up pennies in front of a steamroller. One day you're going to get crushed, right? It's called an IV crush, where IV just spikes. It's like VIX, like the VIX product in traditional markets. It just goes up 20% in one day, and option sellers are essentially wrecked, right? But if you look at crypto markets, our last major vol spike was November of last year. So November, which was FTX crash, all the way to May, it's been down only in volatility. And right now it seems like it's coiling up. And we can get into that a little bit later on what that means. But vol has been down since November, and it's been for us selling options only since November. When the regime changes and it's back to up only, up in vol, price up only, then we'll go back into buying vol. But for right now and since November for us, it hasn't made sense. If you've been a buyer of vol since November, you've pretty much been SOL every day paying theta to Marty.
Awesome. So can you actually break down theta for us? I feel like that's a term that's frequently used in options, especially for crypto. And how does that relate to the price of options and profitability on certain strategies?
Sure. As the longer dated that the option is, the less that the theta is, and theta is essentially a payment that you pay every day. It's a time decay, so the theta will get higher and higher the closer it gets to expiration. So let's say if you buy the end of the month any option, I don't know, May 30th or 31st, then at the maybe you're paying $5 today, and at the end of the month you're going to be paying $40 a day, and that's per contract, right? So I have a lot of people message me, oh, I bought these calls or I bought these things, but my theta is like $1,000 a day, and I'm like, do you understand that you're losing $1,000 a day, and the price has to mega soar? I don't know what's the price right now, $7,000.
Yeah.
Yeah. So let's say if you buy the $28,000 call for the end of the month, whatever the price of your option is, you have to be above that to break even. So I don't know. Let's just do a rough estimate. The price has to be, your strike is 28,000. I buy the $28,000 outright call. Every day I'm paying theta, but my break even is maybe 27,500 because of my theta payment and my cost of the option. So if it goes to 29,000, 40,000, 50,000, of course you're going to make a shit ton of money. But unfortunately, volatility markets right now are pretty dull and near all-time lows, especially in ETH. So for it to do, I remember like $5,000 a day candles in Bitcoin. Yeah, that's not happening anytime soon unless there's a volatility crisis, a black swan event, which I don't see right now.
Okay, so then in that same vein now, let's pivot a little bit and talk about how you see volatility going into, I guess, the rest of the quarter and probably going into the end of the year. You said you're kind of short vol right now because you don't think it makes sense. When do you anticipate, or do you anticipate a regime change this quarter, this year, and I guess going into the future weeks, months?
Sure. I'm not going to say exactly what we're doing, but a lot of funds have taken on a lot of inventory of short ball, just trying to get a gold star of who can sell the most volatility. It's been like a pissing game basically between a handful of bigger funds, above our league. And there's been an interesting trade going on, which is they're long Vega, which means that Vega is another Greek, just like theta. There's a handful of them, but theta is an implied volatility Greek. So they're just betting on implied volatility rising. That doesn't necessarily mean that the price goes up or down. Of course, everybody hopes that the price goes up, right? If the price falls $10,000 in a day, it goes up $10,000 in a day. It's a volatility event. And then maybe the next day volatility crashes or keeps going on. But the interesting trade that these bigger funds are taking is they're basically short June into June because everybody goes to the Hamptons in New York. And then they're long September, December into the end of the year. And doing this sort of trade, if the price goes up, you get a free call, right? You basically get um, a free trade towards the end of the year if the price keeps going up. But for us, I don't know if that necessarily makes sense because you have the Bitcoin halving in 2024, and
Yep.
then you have the presidential US elections in 2024, and this seems more like a bigger catalyst for a volatility catalyst than Q3, Q4. And that doesn't mean that the price can't go up or down, right? It just means like a full total regime shift where this, like a 2008 to 2021, where it's just up only again, right? Where there's a
Got it.
full regime change. I don't see that happening. Maybe we're wrong, right? Today I'm not feeling like, oh my God, just because these funds are doing this, it's right, right?
Mm-hmm.
Maybe the trade is just cheap. That's always why people are doing this trade. Oh, vol's cheap. Well, right now I think Bitcoin vol's like 50 or 51. It's basically muted, right? Usually we want to see like 70 to 90. And there's no reason that it can't go lower. And I don't know, people can fucking quote me and timestamp this later, but there's no reason that it can't go lower. And the only way unless there's a black swan event, the only way to dig yourself out of this low volatility regime is time. And time, maybe you get a big fund buying some crazy amount of Vega, which ends up shifting the whole market. I think Tony Stewart put out something today, like you would need like 2 million Vega, which is like an insane amount of option buying in crypto to actually push the market into a new regime. Or you have this catalyst, which is the supply crisis, the halving, and the presidential elections 2024. That seems more natural for me.
So then, in that same vein, am I right to go out on a limb and say you kind of expect a muted rest of the year in terms of volatility? You know, price can chop around up or down, but we're not really going to see large volatile directional moves until going into next year, into those events you just mentioned.
That's kind of what I'm looking at now, unless you have some black swan like I don't know, you have all kinds of shit going on right now. You have Celsius, you have all these different events that are coming up. And as let's say Binance goes down tomorrow, like an FTX. Oh, everybody's screwed who was selling vol, right? It's up only. You're going back to 120 ETH tomorrow. All option sellers, if they were unhedged, you're going to have another three arrows type situation where big funds are underwater and done and out for. But looking at TradFi and looking at crypto, it just seems muted unless these guys are right that you're getting this Q3, Q4 pump, maybe just, Santa pump, pay for Christmas presents. But people seem to be going to the Hamptons for the summer.